Good day. It is Sunday, November 24, 2019. Thank you for joining us here on YouTube. If you've ever seen the movie Margin Call, you'll probably remember a scene from that movie. If you haven't seen the movie, we highly recommend it. We're sure you'll thoroughly enjoy it. But in the movie Margin Call, one of the fictional character by the name of Peter Sullivan says, as he's looking around, having gotten the signal that is inducing them to sell their hundreds of billions of dollars in debt securities, mostly mortgage. He says, look at all these people wandering around with absolutely no idea what's about to happen. That statement from the fictional character in that film is so apropos of the time we are living in today, you and I. If you look around you at the people wherever you happen to be, I can certainly guarantee you that they have no idea about what's about to happen to the stock market and to our economy. And that brings me to the whole thought of market tops, primary cycle market tops. It was Jesse Livermore who said there is nothing new in Wall Street. Whatever happens today has happened before and will happen again. This came from a man who started his trading career with $5 in the 1890s. All the money he made in his life, he made from the stock market. And in the 1929 bear market, he had turned that $5 into over $100 million, the equivalent today in 2019 of over $1.2 billion. That's with the B. And he obviously knew what he was talking about. He would constantly say, be right and sit tight. Well, he was very right about identifying the market top in 1929 and then sitting tight as he shorted the market and rode it all the way down into the 30s. 1 week ago, in an article entitled Blow Off, we showed this setup in the market right now. What you're looking at first is a daily chart for the last 2 years of the Standard & Poor's 500. Here's that first top back in 2018, January, and then we had another top later in the year, another top later in 2019, and another one just now. And as we go down and look at the characteristics or what these key indicators are saying now at this top, we see that the CBOE, call put ratio, is at an extreme, the kind of extreme we only see at cycle tops. The New York Stock Exchange advanced decline line is now beginning to diverge and decline. The McClellan oscillator at the new high in the Standard & Poor's 500 was negative 4.49 a week ago. The summation index was declining. The NASDAQ McClellan oscillator was negative 0.86 at that point. The McClellan oscillator for the NASDAQ was declining. Transportation average had failed to confirm the new high in the Standard & Poor's 500, as had the Russell 2000. All of those are earmarks of a cycle top. And we talked about that last week in that article, and we pointed all these things out that we just said. Now as we move forward a week, here is that those same indicators a week later. Here was that top in the S&P 500. It actually went 2 points higher on the day after we wrote that report, and it has never been back there. That was last Monday, and that was the all-time high on the Standard & Poor's 500 before or since. next to it, we put the top of the market for on January 26, 2018, and showed all of those same indicators side by side. So you can see what a top looks like. This is what a top looks like. Here we go. The daily chart of Standard & Poor's 500. Here's a peak on January 26. Like the peak we had last Monday in the Standard & Poor's 500. As you see, we had same kind of extreme on the CBOE put call ratio, the kind we only see at cycle tops. We had the same on the New York Stock Exchange advanced decline line. It had been diverting for 3 days, January 26, 2018. It now has been diverting for 2 weeks. The McClellan oscillator was negative at that peak in 2018, January 26. It was negative last week and has gone down since. The same thing for the summation index. They are declining. Same thing for the McClellan oscillators on the NASDAQ, negative at the peak in the Standard & Poor's 500. Same thing for the summation indexes. They are declining. The transportation average failed to confirm that new high back in January of 2018. It failed to confirm this last week in the same way. That's also true of the Russell 2000, failed to confirm back in January of 2018, failed to confirm this week. And you can see what happened immediately after where we are. We are 4 days off of that top. Here I've marked 4 days off of that top as the market was already declining. And here's what happened immediately after that, the first week in February 2018. We're not saying we're going to have a 200-point decline in Standard & Poor's this week. That's highly unlikely with a holiday in that period, but we are saying that the general pattern is the same, and I'm going to show you that for 4 different time periods below. Over the decade, primary bull markets have topped in the same way over and over, time after time. Today we're going to compare pivotal market internals and broad market averages for the market tops in 1987, 2000, 2007, and 2019 right now, so that we can see these striking similarities. They can be seen firsthand by the viewer of this video. Going on down, here are those 4 time periods: 1987, 2000, 2007, and now 2019. Here's a new high in the Standard & Poor's 500. Actually, we used the Dow Jones. No, that was the Standard & Poor's 500. Made a new high, all-time high, never seen before or since. Well, never seen before or for many years after at that time. And then here is the all-time high in 2000, the all-time high in 2007, the all-time high in 2019. Below that, you're looking at the Russell 2000. There was no Russell 2000 in 1987, or at least the IWM that we used for this chart didn't exist then. So that's blank. But in 2000, notice it failed to confirm the new high in the Standard & Poor's 500, as it did in 2007 and as it did here in 2019. Actually, if you go back several months, you'll see that there was a higher high than this whole cluster of peaks here. But in any rate, at that peak last week, it fell short of its prior high. Now look at the advanced decline line. Failure, 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 and failure right now. Same thing at the top. Now let's look at the transportation average. We'll see the same thing. My charts are so small it's hard for me to read that. Yeah, this is a transportation average. It fell short, fell short, fell short, fell short, failed to confirm in every case. Here is the consumer discretionary index. Didn't exist in 87, but in 2000 you can see how far short it fell of confirming the new high. In 2007, you can see it failed to confirm, failed to get back up there, fell far short. 2019, here it is again, same thing, same pattern, fails to confirm confirm that new high. So moving on. Oh, so hard to see these because I've got them so small. At any rate, we're going to post our article on the website so you can go back and fill in the blanks, but you'll see that item by item, year by year, at the top, the same indicators failed to confirm the new high. These are the oscillators, by the way. This is a McClellan oscillator. This is a McClellan oscillator for the NASDAQ. They all fail to confirm, and we will be posting this article. So again, we note that in each case, the behavior of the internals and the broad-based smaller cap indexes showed particular characteristics at each cycle top. Specifically, they topped before the Standard & Poor's 500 and were already leading markets downward by the time the Dow or the Standard & Poor's reached its peak level for the entire primary cycle. And after that, they failed to confirm that all-time high. That's what's happening right now, folks. We're there. We got the same thing. I know we said that 2 weeks ago, and we were surprised to see that with all the news from trade hopes and the Fed, they managed to spike it one last time. But the odds of that happening again are getting very, very slim, although not impossible. So there we are. There's what it looks like. Here is a chart of the Standard & Poor's 500 in 1987, 2000, 2007, and 2019. Below that is the volatility index VXO, which existed in 1987, still exists today. That's the only one I know of that was in existence through all four of those periods over 32 years, from 87 to 2019. Look at the same pattern as each time the market hit its new high and then began its decline. Same thing, same thing, same thing. We're there again. Notice that in the days following the day that we have circled to represent today, that volatility index spiked. We expect to see that this week. If you look out for the weeks and months after this primary cycle top was in, here's what that looked like. Here's the top in 1987, and here's what followed. Here's the top in 2000 that we pointed out, all of these having the same pattern as right now, and here's what followed. Here's the top in 2007 when the market set up exactly as it's set up now, and here's what follows. So that's really it for today. We wanted to give you a view of what a primary cycle top looks like, and we just saw what the markets that follow primary tops look like. So we have some exciting times ahead to look forward to. If you go to the website and scroll down to the bottom, there's a number of articles there. We're going to add today's article to that as well. And just a moment here, let's leave this behind, and you will see a number of articles there at the bottom that you can click on, and you can read these. We hope you will. Um, You'll also see limited time trial right here. Limited time trial. If you click on that, you can have a 7-day trial. In honor of this critical period in the stock market right now, we set up a limited time trial of 7 days for just $4.95. So we hope you avail yourselves of that. You can see everything that we do here. You can see our signals, you can see our trades, you can see our indicators, the 7 sentinels themselves in 4 different time frames. Yeah, we post during the day, every night, and a weekly article every week. So again, we want to thank you for coming here and watching this video with us today, and we wish you good trading.